Everybody, welcome into this week's long-form episode on Mining Stock Daily. This interview, I'm happy to welcome in a friend of mine, but he's never been on the podcast before. Let's talk geologists that went to the sell side, then to the buy side, and then to management, and is now working back up in his home area of Sudbury with our friends at Magna Mining. Mr. Greg Huffman, who I ended up meeting on a site visit down in Colombia a number of years ago. Great guy, just one of the hardest working men, whether he's with the brokerage firm or with the corporate management team. Wealth of information. Just, I don't know, there's many rocks left unturned by Greg, but to boot, he's also probably one of the nicest guys I've ever met in this industry. So I'm really grateful that he was able to spend most of an hour discussing his career, his approach to analysis, and then also a few big backstories he was involved in that many of us will be familiar with. So big thanks to Greg for joining us. And a very special thank you to Vizsla Silver, Integra Resources, Revival Gold, and Equinox Gold for the continued support of Mining Stock Daily and these long-form interviews throughout the week. And as always, please leave us a like, a review, all those things, and share with like-minded people. All right, let's get into this great profile conversation with my friend Greg Huffman. Hey, everybody. I am really looking forward to this conversation. Quick backstory here, how I first met Greg Huffman. We were actually on a site visit down in Colombia to the Guayabalas project with Collective Mining a few years back. And that was the first time I've ever met Greg in person. At the time, he was with Canaccord on the sell side of things. But it was just like incredible to meet Greg and watch him work and do what he does best. And he's got a number of stories he's going to break down. But ever since then, I've always tried to get him onto the podcast, but was never able to do so because really it was well worth the patience, I must say, because now that he's not in a big institution, he really gets to open up and share some stories, share some insights about how he's approached these markets, from the institution side, from management side, and now he's with our friends over at Magna Mining. He's the Senior Vice President of Capital Markets. Greg, man, I tell you, it's been, 2.5 years in the making here to get you on, so welcome to Mining Stock.
Appreciate it, Trevor. No, it's apologies for it being long overdue, but very excited for today.
All right, little bit, let's give it the backstory. Geologist, like I said, you went to the sell side, you went to the dark side, some may say. Let's just go to that. But honestly, man, wealth of information, tons of stories. Walk us through this career and, where you find yourself today.
Yeah, no, happy to, and I've been super lucky to have worked on a lot of sides of the capital market side of the mining business, and now obviously working for a producing company in Magna. So really started off studied geology at Laurentian University in Sudbury. Really fell in love with Northern Ontario and Sudbury in particular, and it's always sort of resonated with throughout my career. I'm actually a resident of the town of Levack, just outside of Sudbury, and so really nice to be back working there. Moved from Sudbury, where I was working for Falconbridge at the time, down to Southern Ontario. I actually did originally go back to school to further my geological education, and that didn't last very long before I ended up taking a job with a very small boutique brokerage called Tollcross Securities, and that was in the late 2003 actually. And I didn't really know what a mining analyst did. That's what the job that they were looking for. But there was a deep Sudbury connections there as well within that firm. And so they were willing to take a chance on a young geologist. So joined on them and quickly got a crash course in sort of the capital market side of the mining business, particularly as it relates to sell side and becoming a mining research analyst. And I was very lucky. The first two files that they dropped into my lap were uranium They asked me to learn everything I could about uranium. And then a small upstart company in Sudbury called FNX Mining was actually the first operating company I wrote research on. And both the uranium sector, he started off on a massive bull run over the course of the next 5 years from 2003 through 2008. Probably one of the greatest bull runs that I've been able to witness firsthand. And then FNX Mining, a true success story, best performing stock on the TSX over the course of the 2000s, 2000 to 2010. So really got a front row seat and a very rapid education and christening into the capital market side of the mining business. From there, I moved on to sorry, go ahead.
No, I just want that Levac, the FNX Levac stuff, obviously pertinent now with your position with Magna Mining as the company continues to progress towards a potential restart of Levac. And it's interesting, were you always kind of, being based out of Sudbury, were you always really interested more in, the nickel, the PGMs type of geology? It sounds like you were kind of thrown feet into the fire here on the uranium side of things, but that turned out to be, a continued success for you down the road.
Yeah, you know what? That's probably where my comfort, really was in terms of base metals and particularly Sudbury geology. But I think that's one thing that really, as a geologist, you're trained to look at, many different, commodities and deposit types within those commodities. So you really become a little bit of a jack of all trades. So, and really my role on as a mining analyst, parlayed very well to that, looking at everything from, the base metals to uranium to, cross precious metals, orogenic gold systems to lithium to rare earths, diamonds even, at points, bulk commodities. It was really, a very good grounding and background to be able to sort of, have an educated view on a number of different commodities and sort of the equities related to them.
So you've seen a lot of rocks. Now you dig real deep into things here. When, talk about kind of that transition into the institutional side of things, into the equity side and analyst side. Like I mentioned before, I've watched you work, and it's hard to pry you away from the core. When we were down at Guayabala, so you were, when I was observing you, I was like, is he really liking what he's saying, or is he just completely nerding out on the rocks, trying to find that, that needle in the haystack? And so, how do you approach those site visits? If put that analyst hat back on, did you approach those site visits? What were the things you really wanted to see, and what check boxes had to be marked off every time you entered a project to call the office back up and say, this looks good?
Yeah, and it's really probably a combination of both those aspects, nerding out on the rocks and getting really excited when you do find something maybe that the market hasn't realized or has missed as it relates to the technical aspects of the story. But for me, going back even to my early analyst days, it was always really important to get boots on ground and do those site tours. Like we have many management teams come through the office, present their glossy decks. We see the good, the bad, and the ugly from that perspective. But really, the quality of the underlying story can really be masked by how good or bad of a presentation the management team does in a boardroom setting. You really need to get to the site to understand what the quality of the people doing the actual work is, how much support and sort of latitude they get from the head office, and then most importantly of all, sort of what the underlying rocks look like. Sort of to be able to look at those yourself firsthand. Talk to the people doing the work. Make your assessment of is the quality of work being done to the degree that it needs to be. And then what do those rocks show? What is the real underlying potential, and maybe how that can be presented to the market. Because really, my client base was the institutional audience. So, I'd get back from a site tour and call up my institutional clients, be it mutual fund, hedge fund, pension fund, asset managers, high net worth individuals, and really talk to them about what I saw and what I liked and what I didn't like. It's really being able to be the translator from seeing what you see on a site tour, giving your take on it, and really presenting them where you think the opportunity lies.
So, in your institutional side of things, you went from sell side analyst, and then into buy side, and then into equity sales. Let's pretend there's an 18-year-old there looking to go to college, wondering what their future holds with them. Can you kind of break that down for everybody? What does the responsibilities kind of entail and the transition, new skills you have to learn in those transitions?
Yeah, and you know what, I try to, I think part of, our role is to sort of give back and talk to the next generation of mining people coming through the school systems. And so I do like to take the time to break it down. So really the mining equity analyst is the one who's out there looking for the ideas. The mining equity salesperson is the person who's taking those ideas and really packaging them up and pitching them to clients. And when they need more detail, getting that mining analyst onto the phone. And then, who are they on the phone with? Well, that's the investor. That's the, in my case, a lot of the times it was an institutional investor on the other end of the phone. And, this can be someone who's, a mining portfolio manager who's got an incredible wealth of experience in the mining industry, or it can be a generalist who doesn't know anything about mining. And you really have to, as a salesperson, read who your audience is, what their level of knowledge is, and how you can sort of best communicate that individual point or story that you're trying to talk to them about. So it's really about knowing your client first and foremost as a salesperson, and presenting good products. So you have to be that filter. You can't just take every story that the analyst or the banker comes and presents you with. You really, like, your reputation with your clients is all you've got. And you have to preserve that. And I was lucky enough to have a long career on the sell side at a couple different firms, and as an institutional equity mining sales specialist. And it's something where you have to, that's gold. That really, really is the most precious thing you have as a salesperson.
Yeah. What is the status of mining analysts? The occupation of mining analysts right now? We've heard a lot of different things. I've been on a lot of site visits with a group of analysts before, Greg. I think just observation. It's an interesting crowd. They don't want to give away their secrets. They don't talk to each other much. If they have questions for management, they typically don't want to ask them out in the open with everybody else, because they don't want the other analysts. Like, there's this competitive nature, it seems like, in it. But at the same time, like, I don't, and maybe I'm wrong here. Tell me I'm wrong if I am, but it doesn't seem like there's a new breed of like educated geologists coming in to be an analyst on many different fronts. And so there's almost this gap, right? And we continue to lose more analysts than we do gain them. Is that fair to say? I mean, what is the nature of the mining analyst right now, that even as it's continued, it's really important for the industry?
It really is. It's a fundamental part of the job. And I don't care what anyone says. AI will never replace the ability of an analyst to go and check out a site and meet with management and really understand it, and come back and talk to their internal team as well as their external clients about that. I'd say I have the utmost respect in the world for lifetime analysts, people who are an analyst for the majority of their career and stick with it. It's a hard job. Like, it's a grind. From the quarterly earnings reports to the site tours to living and dying by your last call. People don't remember the great call you made a year ago. They remember you for your most recent one. So it's right. Not an easy job. And I've been really lucky to work with many great analysts who have been lifelong analysts, and I've learned a lot from them. It's something that I was an analyst for about 5 or 6 years, and man, that was a tough 5 or 6 years. So those who do it for a long time are really special people. And in terms of the up and comers, like, I do think that it's not really a career that a lot of people gravitate to. Like, it's not really taught, as if you're going through for an earth science or mining engineering degree, a lot of people aren't saying, I want to be a mining analyst. It's really something that a lot of people fall into by accident. You get a lot of people who are going through for finance who want to be investment bankers, but you get very few who say, I want to be an analyst. It's a bit of an in the trenches role. And I think it's something there. It takes a special type of person with a special skill set to really, really do it well and do it for a long time. And I think it's really important that we sort of get that out there for the highly analytical people, particularly within the branches of the earth sciences and mining engineering, that this is a good option for them once you get experience. I think that's another big thing is having a bit of real world experience working in the mining industry, and then being able to make the transition to the mining analyst role. You can really draw upon that. And there are some really good younger up and coming analysts who have that experience maybe they're probably newer in the analyst role, but they've got great experience working, either at a mine site or out doing exploration, and they're able to bring that experience. So that's something that I think we really need to work on and foster.
Yeah. Uh, How do you break down the value creation of companies that are on the shoulders of these institutions and the analysis reports that are published and those relationships that those individuals have with whether it be, institutions on the outside looking to buy or even high net worth individuals? It's a real linchpin of a relationship there. But, how do you break down the value that's brought in for any said company that's listed on the venture exchange, or any resource company that's really beholden to the reports that such institutions are putting out?
Yeah, I think it's incredibly important. Like, now sitting on the corporate side, one of the most often asked questions, as we're wrapping up a meeting with a buy side institution, is, okay, who all covers you? And which of those analysts do you think has the best handle on the story? And oftentimes it's not a single answer. One analyst might have a really good, view as to the geology. One might have a very good financial model. One might have a really good sort of take on sort of the scuttlebutt that's going on, around the jurisdiction. So yeah, it's really, it's for an analyst, the real value add is what goes beyond just sort of, what goes into the report. Like the report is, oftentimes there's a time constraint. It's getting that report out, your take on the news, and really, the buy side is absolutely inundated with information, and it's even more so now, and it's actually changing how they analyze that information with AI. They've got AI programs that can scrub research reports and just come up with a summary. So really, it's all about for me, I had a head of research once who taught me your most valuable real estate in a research report is your headline. And I think, I've lived and died by that statement. I think really the buy side doesn't have time to read every report, so they're going to be selective. They're going to scan a lot, and if you capture them with the title, and make it unique. If I'm reading a Q3 report in line, am I going to open up that report and read through the rest of it? Or if it's got something that's really value add and sort of really captures me in terms of what's special or different about those Q3 results, I'm much more likely to open it up. So I think there's both the content and then the presentation, which is really important from the mining research analyst community that really helps drive the value add.
The odds are not in our favor for explorers. What's the latest at? A 1 in 1,000 exploration projects actually becomes a producing mine, or something like that. The odds are obviously very terrible, but it does rely on these reports, on analyst coverage here. But very seldom here, Greg, do I ever see an active analyst just drop a story because exploration's no good, it's been mismanaged, or just maybe it's just not there. When is that breaking point? Or is there any specific examples that an analyst, maybe even you, just literally like you started coverage of a company, things were looking good, and then obviously took a terrible turn, and you knew the story was very different, in fact probably value decretive for your readers, where you literally just had to pull the plug and say, no more. I was wrong.
Yeah, and it does happen. You're playing the law of probabilities here, and every junior mining company that you go and visit the site, you're not going to write a research report on. The ones that you do write a research report on, not all of them are going to turn out to be successful in translating that project into a mine. So just because it doesn't end up being a mine doesn't mean that it's a failed company. A lot of times you're there. End of the day, your job is to sort of try to identify the equities that have the best chance of outperforming their peers. And usually that is related to advancing the project successfully, but sometimes it's related to calling the commodity correctly. So you can have different companies succeed at different points in the cycle, as it relates to the commodity price or just sort of where the market's ascribing value. So for me, yeah, absolutely. There's been lots of times where I've had to sort of fade into the bushes and just say, like, listen, this one didn't work. For whatever reason, I called the commodity price wrong. I thought this was going to be a great story. It is a great story. However, the commodity is down by 80%. So guess what? The project that we thought was going to be highly economic now isn't going to cut it. So we think you're better off going elsewhere. And end of the day, the buy side respects that honesty, and the fact that you're working hard to keep them updated. And so it's really, it's your credibility. It comes back to that sort of, the credibility aspect of the role, and you're only as good as your your track record and the people, the opinion that people have of you.
Can you comment on the relationship between the individual reports from the analysts and really the expectations with the employers, the actual institutions, knowing that they've got to make money, there's a business there. They probably hate the idea of, as you said, kind of fading into the bushes and admitting when something didn't go as planned. What is the expectation between those institutions and the actual individuals writing the reports? And how much is there pressure coming down to keep those things going, to keep the fees flowing into the banks, into the coffers?
Yeah, and I think that's one of the interesting aspects of the system, like how the structure of the brokerage industry, in terms of generating fees based on equity underwritings and advisory, and then as part of that, having analysts recommend or not recommend particular stocks, and it's a very delicate balance. And I find that it's gotten a lot better in terms of separation of church and state over the years. There used to be a lot of pressure in terms of delivering positive research reports no matter what, and I think that's really I've seen a good evolution of that. I see that there's a lot more honesty in the reports out there today. And maybe, if the results aren't good, people will say that, but then try to find a positive spin. So a lot of it is trying to read through that spin and really understand sort of what the underlying analysts, and that's why the value of, the report, opens the door, but really, a big part of the analyst and the salesperson's job is getting on the phone. You have to have that interaction with your clients, not just as, sort of churning out research report after research report, but having that open dialogue with them in that personal relationship where they feel comfortable to pick up the phone and say, hey, what do you really think? What were your thoughts here? And give me like, and a lot of time, it's a static buy or speculative buy recommendation on a stock. There's points where, an analyst might be, table pounding buy, or like, the stock might have run too far right now. I'd be maybe, maybe not buying right now, or maybe taking a little bit off the table and looking to reload. So there's really sort of, the best analysts out there do have that personal relationship with their client base where they can have those dialogues and really sort of help guide their clients under that sort of all-encompassing buy rating.
Yeah. You've got when you're writing those notes, incredible track record. You were telling me the story when we first met. You were telling me the story about your first time at Great Bear's Dixie project. And I'm hoping we can rehash this because, like, I literally about shit my pants when you told me this, to be honest with you, about how you went in there late and found some old core boxes and took a look, and then c'est la vie after that. But tell us about that first introduction to Great Bear and the Dixie project and what it was like in your involvement early stage.
Yeah, no, I've been really lucky to have had a front row seat for many, many, many truly fantastic discoveries. I think the term world class is overused, but there's been a lot of stories where I've been on site or gone for seen management early on and said, hey, this might be something special, and this was an interesting one, and it was part of a trip to through Red Lake that I was doing with my analysts at Canaccord Genuity at the time, and we were seeing all the stories that were active, in the camp, and at that point, Great Bear was it was the newcomer. They were the ones, the new kid on the block, and had a different sort of thesis in terms of what they're going to look for. They're looking at a project that had been previously explored by another group who had kind of broke their pick on it and said, oh, this doesn't work, and they had gone back with a sort of different hypothesis originally, that basically the mineralization had been sort of not interpreted correctly, and that's what got the Great Bear team in there. But this is the joy of doing the site tours and what you really learn. So we get there and they said, okay, here's what we're doing on the sort of historic part that's been drilled before, but there's been some other drilling like long time ago on this concept. this deep, related to a lithosphere, deep transect that had been done to sort of, seismically map, deep sea crustal structures. And, we sort of found this report and then, went out there and lo and behold, there's records in the assessment files with the government of some holes being drilled out there. So we went out in the bush and we looked around and we found the cross-piled core and we brought it into the core, into the core yard and we laid it out. Most of the core hadn't even been cut. But there's boxes upon boxes of uncut core, and it hadn't been cut because it was all through the felsic volcanics. And the dogma or the mantra in Red Lake, like there is in many camps, for Red Lake, it's like the gold only occurs in the mafic volcanics and the basalts and structures related to those. So, this, for whatever reason, this company drilled lots into the felsic volcanics. Maybe the geologist fell asleep and let the rigs run too long or whatever, but there was boxes upon boxes and we went over there and they had weighed it out and they said, take a close look. And you could actually see VG in the uncut core. So it was just absolutely stunning. And it's like, wait, where did this come from? And it's been sitting out in the bush for how many years? So it was something that really, like, that was, obviously they had to do the confirmation drilling that would never make it into a 43101 compliant report or even press releasable, but it was like they sent the rigs out there and that was the beginning of the LP fault discovery, which really changed the thinking about Red Lake. So it was pretty special and obviously something where if you wouldn't have known that had you not made the effort to get there and be a part of that site tour.
So Chris Taylor was CEO of the company. Chris has been a partner of the podcast before. He's been on. I mean, so were they aware of what they had within those core boxes? Were they just kind of like nudge here? Greg, go take a look at this core.
They
give a little
were aware.
idea.
Like Chris and Bob and the team were phenomenal geoscientists. And that's something that, again, you get a lot of people out there who, maybe don't sort of, forget about the science part of the aspect. And so they were using really, really good science, and good observation skills and sort of to be able to go out and say, like, oh, there could be something here. What could we do to help sort of de-risk it? And it's sort of, oh, there's previous holes. Let's get the logs for those and then let's go see if we can actually find the core. So they knew what was in there. They could see it. They hadn't assayed it yet, obviously, because it had just come in from the field, but it was pretty special stuff. And at that point, was this just a one-hole wonder or was it part of a bigger system? They didn't know, but I knew that because of going on that site tour and seeing the quality of the team, I knew that if it was there, they were going to be able to figure it out.
All right. So you see this core, you go with your eyeglass, you probably spend about 5 hours looking at this stuff, knowing you. What's your next call back to the office? What happens after that?
Well, it's something where it's like, what, this Red Lake tour has been good. The company XYZ is looking good. Company ABC, maybe less so. But this Great Bear, this GBR, this, I think it was probably about a $60-70 million market cap company, they could be onto something really special. So obviously, let's get on the phone with some of our clients who play in that sort of end of the spectrum from a market cap perspective, and let them know about this opportunity, that this could be something that's special and there might be a market inefficiency here.
Yeah. Okay. So and how does the institution respond? How does Canaccord respond? What's the big move?
Yeah, from the brokerage perspective, like they're very excited. Like whenever, like, a sales desk is a very, very dynamic place. It's like a hot stove that you need to feed with ideas and information. So, and that's both from the rest of the sales team, and from the trader perspective, because the sales team's out there, trying to get their clients the best ideas, their institutional clients the best ideas, and then the traders are looking to execute trade on around those ideas. So really, it's about coming up with good ideas. And again, you gotta bat 500 or better. if you're batting 1 out of 10, the sales desk isn't going to have confidence in you. So you got to keep your bullets, save your bullets for the right ones. But always be out there looking for good ideas to come back to them. So when you have something and you have high conviction on it, you come back, you pound the table saying, this, we think there's something special here. And generally that's, if you've got the desk's, sort of confidence, they'll get behind you on it.
All right. So you were one of the Were you the first, or maybe just one of the early movers
I think we were one of the,
on
yeah,
the Great Bear?
Canaccord as a whole was one of the early movers in terms of recognizing Great Bear, and obviously, had a great run with it all the way through, with Chris and his team, and we're able to help them,
That's
in terms
modest.
of
That's pretty modest, Greg.
keep the drills going, keep the company financed, and then eventually, when it came time to transact the company, had a role from the advisory perspective at Canaccord, actually working for Kinross there. So that was and again, I think that comes down to sort of how the brokerage firm works as an overall sort of team. Because we had the sort of the early call when we're trading a lot of the stock and helping out on the financings. We're active in terms of marketing the company. I remember bringing Chris and the Great Bear team over to London when it was virtually an unknown company, and putting them in front of our London-based clients. And so, really helping out, get the story out there. And eventually, our bankers had a fantastic relationship with Chris and the team, and as well as a number of their directors, and ended up, when Kinross wanted an advisor, for when they were looking to buy, they came to Canaccord because they knew that Canaccord did have a very, very strong relationship on the other side of the equation.
Okay. I want to kind of ask you about a few other stories, not just Great Bear, although, I mean, in my time in this sector, that Great Bear sale was probably one of the pinnacle stories. I would say the Philo story is also a pretty big pinnacle of a story as well. But one of the early first stories that kind of hit my desk when I first started, Greg, was Arizona Mining's Taylor deposit. They got sold to South 32. It was interesting. I mean, it was a huge sale, right? And for a big base metal CRD project, huge sale to South 32. It's still kind of out there, right? Like, I think everybody's kind of like wondering, all right, what's next for the Taylor deposit and the Hermosa and all this. But walk us through, like, when you worked on this and you were covering it, but what was kind of the expectations with the Taylor deposit? And are you at all surprised that they're not further along than where a lot of people were expecting it would be?
Yeah, and I think it's one of those things where you go from, all the excitement around a discovery, and Hermosa was really a fantastic story. And I remember having an early call with a guy named Don Taylor, who I didn't know, but our banker at the time. I was working in mining equity sales at Scotiabank, and our banker had a relationship with one of the founders of the company, Richard Work, and said, "Hey, can you do a call? Do me a favor call," which there's a lot of. "Can you talk to this Don Taylor? Apparently he's this, this geo who's got this project in Arizona called Hermosa. It's manganese with some silver, and, just, humor him." So I did. And is like another kind of one, somewhere in the Great Bear is like, wow, this guy really knows what he's talking about. Like, he's got some good ideas based on what's been done, and then a concept or hypothesis. And again, Arizona Mining was, a microcap company at this point. And it was, because, the thesis was that there was a larger CRD system, that really was the source of this manganese oxide deposit with the silver. So, which I didn't like at all. The manganese silver stuff, I thought metallurgically was going to be incredibly challenging. So, but this underlying CRD thesis that Don Taylor had was really exciting for us. And so, eventually, I'd moved on from Scotiabank to Canaccord, and, stuck with the Arizona Mining story, and my former sales partner at Scotiabank, Gerald Annett, had left Scotia to join on as SVP corporate development at Arizona Mining. So obviously had a good relationship there, and so Gerald's a fantastic mineral process engineer and has a good handle on the metallurgy there, and could really understand that, from this new discovery, the Taylor deposit is very different, and we could overcome some of those metallurgical concerns that the market did have, and ended up being a phenomenal success. Richard Work's got he's a serial seller of companies, and usually in a pretty dynamic, beneficial situation for shareholders. So, of which he's usually a very large one. So, did a great job, and we're lucky enough to raise some money for them along the way, and then act as advisors at Canaccord to alongside Goldman Sachs for the sale to South 32. Now, in terms of today, moving forward, obviously, it's run into some challenges and probably taken a little bit longer. Some of that's probably internal to South 32 in terms of prioritization. Then some of it's probably external related to sort of granting of permits and things. But now that it's in Fast 41, I think it's coming along, and hopefully it recognizes its potential here over the coming years under current administration.
Can I pick your brain here on those carbonate replacement deposits a little bit? It has been kind of a little bit of a discussion here this week because we chatted with Chad Peters of Ridgeline Minerals. Their partner South 32 as well put out first drill results from Deep Chinchilla zone within Salina, which is their CRD deposit in Nevada. So we've been covering that story. Obviously, the McGaws are serial CRD type geologists as well. Also familiar with a couple of CRD systems up in Alaska with Alaska Silver. It seems like, and it just from layman's, as a non-geologist, but one that covers these stories pretty closely, is that CRDs can be exceptional, but unlocking them is really, really hard because they seem really squirrely in a way. Like it, but once you get it, like once you figure it out and get it unlocked, which could take a few drill holes, then you can really start opening those up. I mean, so I guess my question is, how difficult is it it's easy to maybe define a CRD system, but it seems very difficult to define a CRD system.
Yeah, I totally agree. There's a lot going on. It's a very sort of complicated deposit type, complicated from sort of the genesis of them and the structural controls and sort of what the sort of stratigraphic and structural influences are, and then from a metallurgical perspective as well. They're a bit of a repository for all kinds of very interesting parts of the periodic table, so which can make them sometimes challenging on that front. So I'm not a specialist, so I'll never profess to be one in CRD deposits. I've never worked on one as a geologist. I've looked at lots, so I know enough to be dangerous in terms of the questions to ask and sort of the pitfalls that some of them have had. But yeah, it's definitely one where particularly as a mining sales guy, when someone comes in and pitches a CRD story, I'd say there's definitely sort of a list of questions that come up that you want to make sure that you go through, and that the management team's got a good handle on all those, checking all those boxes.
Yeah. What should some of those questions be if, for those retail investors out there listening, like what are like 2 or 3 questions you should be asking?
Yeah, a lot of it is on the metallurgy, and particularly as it relates to the grain size of the mineralization. If you get stuff that's too fine grain, it's just going to make it even more complicated. You want to know what sort of potentially deleterious elements are associated. So don't just look at the headline assay. Ask about sort of there's a list of specific elements that you want to see sort of that aren't going to be above penalty limits, and then just in terms of the drill patterns, I'd take a real close look at the drill patterns and the cross sections that the company is able to produce. And if they're not able to produce them, it means they don't have you can drill some fantastic holes, right? Particularly if you get into some of the structurally controlled areas or the chimneys, like it's awesome. But again, you really want to make sure that they've got a good handle on drawing the system off and are able to put together some real tonnage rather than just pin cushioning a high grade part of the deposit.
Switching stories, let's talk about the work you've done with a number of Lundin companies. Filo, obviously a big one. Fruta del Norte, I mean, my God, what a beast. That thing just continues to produce a ton of gold without, it just seems effortless. Like, just the cash flow out of that thing is just insane. But, I mean, really, it's within these group of companies, like, betting on the jockey just seems like a no-brainer. If you're, like, kind of just oblivious to this sector and you're looking to deploy, it's like, the risk is almost off if you just follow the Lundin Group of companies.
Yeah, if you just own a basket, like I think back, had I just owned, put my bonus every year into a basket of Lundin Group equities, like not sure where I'd be, but it's the group's just absolutely, and I've been really lucky to have had lots of interaction with the team overall there for my entire career. I remember going back to Toll Cross Securities where I started off. We used to set up marketing for every one of the Lundin companies, every PDAC. and just would have a matrix of all the companies there at the time, and then all the CEOs, and then all the clients, and just would run them around. So it was a really great experience to get to know all the members of the team. I call them the lieutenants, who are running the individual companies, and Lucas himself, who is very very active and had a phenomenal sort of ability to speak to investors, and yeah, really sort of set the family up for the huge amount of successes that they're having now. And you look at the acquisition of Fruta del Norte at the time. A lot of people were scratching their heads, like this thing had not gone well for Kinross, and they'd sort of broke their pick on it a little bit from a permitting perspective, and it's like, what is Lucas doing? And then Ron Hochstein, who was probably the preeminent uranium executive out there from a public markets perspective when he was running International Uranium Corp and then Denison. Lucas decided, nope, you're one of my top guys. I'm going to take you and insert you into this to sort of seeing this Fruta del Norte story through, from basically reestablishing social license right through to production, and get you and your family down to Quito and just set up shop there and see this thing through. And Ron pivoted on a dime, because yes, Lucas will do that, and is executed masterfully. And so super excited. I learned almost everything I know about uranium from Ron, and then to have him sort of moved over just and for Lundin, him to sort of drive the Lundin Gold story through to such a success, and with lots of great partners and assistants along the way, from consultants, from the family support, from the family and the boys going through. Like it's been awesome. And so super excited to see him sort of transition over to his new role at Vicuña, and really I'd be betting on him to succeed again there.
Yeah. How do you kind of summarize that transition going from Lucas, to the boys? And really, it seems like the wings are spreading even wider. I mean, they're now working in Yukon with fireweed. They're doing a lot of stuff, applied strategic investments in Africa on the gold side. But I mean, it almost seems countless. I don't have a full list of things right now, but it almost, to me, it almost seems like they're taking the ideas that, go big, go home. No guts, no glory, I think was the term. And even taking it to the next level. Is there, are they doing this successfully, or, is there a moment where maybe it's gone too far?
Yeah, I think it's absolutely, taking the success that Adolf Lundin and then Lucas built on, and then building on it in spades. So, I think it's something where like they're taking the platform that their grandfather and their father built, and then just growing it meaningfully beyond that in terms of multiple jurisdictions, multiple commodities. And then an important change too is, I think one thing, a hallmark of both Adolf and Lucas, was they would go to jurisdictions where maybe other people weren't comfortable. Whereas I see from the boys' perspective, they're willing to go into more mainstay jurisdictions, but where they think they have a strategic advantage. So, I look at sort of if we look down at Filo and NGX, like that, those were overnight successes that took 30 years in the making. Like I was running around talking about Vicuña back in 2003, 2004. And drilling a lot of holes, a couple holes each season, raising what money they could to keep things going. And it really was almost 20 years before they were able to sort of execute on that success. So it's a lesson in the perseverance. But now you look at what the boys are doing up in the Yukon, is absolutely fantastic with fireweed. You look at what's happening in Arizona with Faraday. You mentioned over in West Africa with Montage. Like they're going to jurisdictions that maybe were a little bit more mainstay, and but really sort of driving success there by taking a similar strategy where there's a deposit that we think is really special and has world-class potential, that we can unlock the value of. And it's just, instead of having, half a dozen, there's probably a dozen of them underway now. So yeah, it's just a group that you want to be aligned with for sure.
Okay. Other story, I want to get your thoughts here about Equinox Gold. I'm a shareholder of this company. They're a partner of the podcast, but please don't, I want you to be, completely candid and honest with your observations here. I was a shareholder of Calibre Mining before the Equinox Gold merger was announced, but I was super excited about this because I kind of saw the writing on the wall. What was Equinox? They were having troubles with greenstone. That was obvious. Everybody knew that. But it's just kind of, this merger kind of shows you the power of a really solid mine builder and corporate kind of, I don't like, and it's just an incredible way of building mines and making them run efficiently. That's what Calibre brought to the team. Their financials came out this week. Their all-in sustaining costs dropped another, I think, like $70. It's below $1,900 an ounce. Input, mining rates are increased, processing rates have increased. Like, I mean, it just goes to show you what 9 months can really change operations here with a meaningful team. Where do you see Equinox, a year from now? Are we going to be talking about them as one of the greater mid-tier, if not maybe moving up to first-tier gold producers in the Canadian markets?
Yeah, I really think that, sort of the Equinox story we see today is a good lesson in perseverance. Like, I'll, sort of rewind really quickly, and you go back to Calibre, and I think Calibre had been around for a long time, and when I was at Canaccord, we were I think raising the money for Calibre to buy the Nicaraguan assets from B2 Gold was probably one of the toughest equity raises I've ever had to do. We had to raise $100 million for them to execute on that, and I worked on that every day of that summer, and the market was tough. Like, gold price was working against us, and it was a slug. But I find, what, the toughest deals often turn out to be the best ones, and we were able to get it over the line. It wasn't easy, but we got there. And really, that sort of allowed Darren Hall and his team to really, start executing on the Nicaraguan assets, and sort of start to spread their wings, generate a ton of great cash. And Nicaragua wasn't always a straight line up. There was a couple hiccups along the way in terms of geopolitically, but operationally they did a great job, and Darren has his eye on the ball with respect to managing government relations. A very, very good job there. So, and then obviously on the flip side, in terms of Marathon Gold, I think between my time at Canaccord, we're probably lead or co-lead for almost every equity financing for Marathon Gold. And man, there was points where that people hated Valentine. They absolutely hated Valentine. Lots of questions on continuity, lots of questions on the resource estimate. Oh, so-and-so, big companies looked at it and says it doesn't work. Yet, it was persevering through because we had done the work, myself and our analyst team had gone to say a number of times and had conviction on it. And, that conviction showed off when, with the consummation of the merger between Marathon Gold and Calibre, which really brought in that operating team that you spoke of, to execute and get Valentine, successfully, completed. And we're ramping up here, and it's going to be a great Canadian mine. And then really just dovetailed that into the merger with Equinox, which really, again, took Darren and his team and put them into a group of assets that really needed that good steady hand from an operational perspective. Equinox brought the scope from their side. So now you've got a fantastic sort of combination company, which I really do think I agree. It's going to, and full disclosure, I'm a it's a big shareholding of mine as well, on the precious metal sides. Yeah, want to share your sort of disclosure there, but yeah, I think it's going to be a fantastic one on a go forward basis.
It's got to be completely nerve-wracking when you're working for these brokerage firms to have that conviction, but the retail market, which provides so much liquidity when things appear messy, hits the sell button and sees things move down double digits. And I mean, what are you to do if you're working in this brokerage firm, knowing like you don't work with the retail side, you work with your guys, your network, your institutions on the sell side. Do you ever wish like you could do more to message out there your conviction to the retail market, even knowing that it's not necessarily maybe your place? It's not there's probably some laws in their rules that just says you can't do it.
Yeah, it's an interesting one, right? Because sometimes you do get those knee-jerk reactions, to particularly on negative events and on positive ones too, but where you get dislocations in the share price. And that's where you need to have that institutional client community that you can call up and say, hey, if there's something happening here that doesn't make sense, there's a real opportunity, I think you should pull the trigger. And in terms of actively managed funds, there's fewer of those, over the last couple of years, but we're starting to see them come back in terms of the reactionary guys. So you can call up and get to sort of say, step in. This thing's gone too far one way or the other. So you need to be able to have those calls. And I'd say, in terms of, the evolution of my career, I've spent, the past year and a half, up until September, as the CEO of a microcap uranium company, like a very, very junior uranium company. So so I got to learn and see firsthand the importance of the retail investor, and spending time and nurturing those relationships, and fostering them, and taking every call. Like, my personal cell phone number was on every press release when I was at Nuclear Fuels, on purpose. So that, they could have a direct line, because that's who moves the needle. My institutional network and client base, they weren't super helpful, necessarily when we first started off at Nuclear Fuels, because it was just too small of a company. Some of them were very supportive, and would participate where they can on equity raises, but in terms of buying the market, they're not able to. So that's really where retail comes in, and that was one of the many, many great learning experiences I had over the course of the 12 to 14 months I had at Nuclear Fuels as the CEO of that company.
Mm-hmm. Just a couple more questions before we let you go. I know we're reaching the end of our time here, Greg, but I started the conversation mentioning I met you at Guayabalas with Collective Mining. Thoughts on Guayabalas? Because it's a much bigger story now than it was when you and I were first there 2 or 3 years ago.
Yeah, no, it really is. And it's great to see those ones where you're there early, and you sort of, you mentioned, getting excited about the core, and you sort of see some stuff that, maybe the market hasn't quite keyed in on, and you come back and bounce it off of a couple of the really, really smart, sort of technically minded clients you have, and sort of run through it with them, and, they might get positioned on it. So yeah, I think it's been a real success story, not just from a technical perspective, but from a market cap and share price appreciation. And that, with the sector, needs those. We need those big wins for people to sort of to recycle money back in the sector. That it's not just rising tide lifts all boats. That independent of sort of what the markets are doing, you can have these massive outperformers based on great discoveries. That's the real value creation, and why we love this sector, because there's really nothing quite like exploration in terms of value derivers of discovery. And one of the big reasons I joined on at Magna after the sale of Nuclear Fuels, because I do see huge potential in terms of new discoveries in Sudbury on that story.
All right. Well, that's my final question. Let's talk about Magna Mining here. And obviously, done such a really good job of pulling in assets, creating a much larger portfolio than they had 2 years ago. Jason and Paul, I remember talking to them. It was a little bit of just an idea. Shakespeare was the first one, I believe. The things that keep adding on, the assets of the KGHM projects coming in. Obviously, McCready producing now, more coming from there. So you do have some cash flow, a little bit of financing, but Levack really seems to be opening up for you guys. And I know you're working with the company, but I'm just wondering, from an exploration geologist standpoint, what does, I think, was it the R2 zone down below with Levack that continues to come up with some really eye-popping grade? How close are you guys to really opening this thing up and getting this mine back up and going to a point where it's, people are just dumbfounded with how much cash flow there's going to be coming from this?
Yeah, I think there's, for me, the real driver for me joining on at Magna was the KGHM acquisition. When I was leaving Canaccord to join Nuclear Fuels, everyone thought it was Magna, because obviously helped it quite a bit in terms of, since the go public transaction of the company, in terms of market awareness and raising the money for the company, but it wasn't the right time yet. It was always Jason and Paul's goal to acquire those KGHM assets and really bring that FNX suite of assets back to the capital markets. And obviously, I was an analyst who had covered FNX, understood them well from then, live in the area, really know the value creation that FNX had through that original Levack footwall, now called the Morrison discovery. That was, I remember, being an analyst and doubling my target price the day that original FNX hit came out. And my phone rang, and it was Eric Sprott saying, "What do you know that everyone else doesn't? Because everyone else says it's one hole and they got to drill more, and you've doubled your target price." I said, "Well, Mr. Sprott, I spent the last 3 years working for Falconbridge and Sudbury looking for exactly what they just found." And and that was the really what kicked off FNX. And really, you can talk to guys like Gord Morrison, who's being inducted into the Hall of Fame and is an advisor to Magna, and was really one of the key drivers behind the FNX success. And he's like, the one mistake we made was stopping after the Levack footwall discovery, which is now named after him. There's more there to be found, and I absolutely agree with that. Like the footwall environment in Sudbury is incredibly prolific, and it really hasn't been a focus up until the last decade or two from an exploration perspective, because Sudbury's a nickel town, right? Well, I think there's going to have to be a big penny next to the big nickel, because I think that in terms of the ability to find high grade copper with amazing precious metals grades, like you're looking at what was mined out of the Levack footwall, now Morrison, was 8 to 10% copper, 8 to 10 grams precious metals, and 1 to 2% nickel for almost 2.5 million tons. Like these are fantastically, massive margin ore bodies, and there's more to be found out there. You mentioned R2. Yeah, we've had some really good initial success into the R2 target. We feel like, we're in the upper parts of a system. These are complicated structurally controlled systems. So it's kind of, like a CRD, it does take some drilling, but we know we're on the fringes of what's something that looks interesting, and we just need to keep. And that's why we're transitioning from, 2 surface rigs and 1 underground to 4 underground rigs by the end of the year. So we've got better angles at it, and that's one of the fantastic aspects of the Levack mine. It's been around for over 100 years and produced a lot of ore, and isn't going to take a lot to get back into production. So we're really excited. It's the big reason I've joined on at Magna, and I think there's a lot more for us to do at both at Levack, the other KGHM properties, and potential other stuff that we could bring into the portfolio here over the next couple of years in Sudbury.
It seems like a just very grand kind of coming home story on the cover of this whole thing. Obviously, not just with you, coming back to Sudbury and being part of this whole thing, and Jason being from there. Those projects, KGHM was, third state-owned Polish company, right? And so, and that's where I cut my teeth a little bit in this industry. I was actually doing some work with KGHM after those projects, after they acquired them, which was quite interesting. But there was this kind of dynamic, right? Like things, Sudbury and Polish company, like, is everything moving, succinctly? Like, is it as efficient as things can? But now it just seems like everybody wants it to be Sudbury's own again, right? Like, is that what you're saying? Is that one of the reasons, like, you wanted to go back to Sudbury and be part of it?
Yeah, it really is. I think there's a huge opportunity. I think KGHM, and I feel, there's some great people at KGHM, and
Of course.
some of them are still, stayed on with Magna. Some are still with KGHM operating in Sudbury on their development project at Victoria, and some of the regional exploration stuff that they kept on. But it's really hard to sort of, when your government controlled entity, and the people who are in charge of that government controlled entity are changing on every political cycle. So it's really hard for them. So I kind of understand that, why Sudbury maybe didn't get as much attention or focus, but that's really where the opportunity lies, and where, the vision is for Magna to sort of, put, the FNX assets back into a publicly, traded company in Canada, but then use those as another building block, and really grow what's Canada's next great mining company on the back of potential other assets that we could bring into the portfolio from Vale and Glencore and others. There's a lot of opportunity out there for a company of our size.
Okay. Greg, an hour well worth the wait. Thank you so much. I look forward to seeing you probably sometime this winter, maybe up in Ontario or in Vancouver. Congratulations on landing back home, and it's an exciting time for the company, but really just incredible stories. And I'm glad we can open up. I mean, I think we hardly even scratched the surface with some of the stories and things that you've seen as your time stomping through mini bushes in this world, looking at rock. But thanks for opening up and sharing some of those stories with us.
Absolutely, Trevor. Thank you very much, and can't wait to have you come up for Sudbury for a visit at some point soon, hopefully.
It's long overdue. Long overdue.
Absolutely.
We'll make it happen. Okay. Thanks, Greg. Have yourself a great weekend, man.
Perfect. Thanks, Trevor.